We play a little Beatles to get us started today. Let's get right to your money. Futures way down overnight as Russia ordered tanks into separatist regions of Ukraine. They have since paired those losses. Come in, David Nicholas. David, is Russia causing this sell-off, or is it still worries about inflation and interest rates?
David, no question it's Russia. So if you look at the market, it was rallying to begin February. It came all the way back from the January lows. The S&P did a 42.22, got all the way up to try to break 4,600 and failed. And it wasn't because of the Feds. It wasn't because of interest rates. It was because of Russia. And so the thing that's concerning me right now is the S&P is setting up the dreaded head and shoulders pattern. So the S&P has to hold the levels that it hit the lows in January, about 42.20. If it doesn't, I mean, this is where you could see a sell-up and another 10% down below 42.20. So, but I'll say this, David, if this just is limited to Russia recognizing these separatist regions, the global impact is going to be limited. But if this is a full-scale invasion, obviously that's where it affects oil, it affects energy, it affects inflation. It makes Chairman Powell's job much harder. But this was all completely avoidable. The getting rid of the Nord Stream 2, it looks like they're putting a pause on that for Germany. It's a great first step. But Germany imports 30% of their oil from Russia. They can't replace that in the short term. So this is going to be very interesting to see how Europe handles this going forward.
So I'm getting the sense that you think that the German announcement that they're going to be cutting off Nord Stream, at least for the moment, is very temporary.
I think it is, because you can't replace that oil. And this is where, even for us, for the U.S., right, 7% of our oil imports come from Russia. 500,000 barrels a day come from Russia. Why are we still buying oil from Russia? It's a completely, it's a failure of this administration. And this is why we cannot be dependent on outside nations for our energy sources, because it backs us into a corner, just like Germany and the rest of Europe is now. So things have to change, David, on that front.
Well, we also have an election coming up. And the question is whether or not the president is going to realize that he's got to do something about releasing some of our domestic energy production in order to address the needs and the concerns of Americans who are getting so squeezed on gas and oil.
Yeah, I mean, you've got the State of the Union coming up. I think the timing by Russia is very coincidental if we get the State of the Union coming up in March. And what affects voters, David? It's the price of food that's soaring. It's the price to put gas in our car that's energy. So these are all topics that the president must address next week. And if he doesn't have a plan, this is where, for Democrats, I think it's going to be very ugly going into the midterms. But real Americans are getting hurt by this. And this is why we say we think oil is going over $100 a barrel easily, especially if this escalates. You mentioned earlier that you could see oil as high as $120 a barrel that you'll have a guest on later. So it hurts Americans right where they need it most, right as the summer months are picking up with travel. Yeah. And this is why I think it's going to be hard for Chairman Powell. If this really does increase, if prices for oil increase, it's going to make his job a lot harder when it comes to raising rates.
Well, and that's why I suggest that you shouldn't necessarily separate what's happening in Russia from what's going to be happening with interest rates, because if the situation does continue to deteriorate in dealing with Russia and we get these energy squeezes even worse than we've seen so far, that is going to put pressure on Powell to go easier on interest rates rising when the economy goes down.
It's a good point, David. Me and you may be the only ones saying that. I don't think we're going to see the 6 or 7 rate hikes this year. I don't think that the Feds are going to move that quick. I still think we may see the 4 rate hike number, but you're exactly right. This Russia pressure is going to put even more pressure on Powell to go slower and steadier versus the 6 or 7 and then 50-point basis hike in March.
It makes sense. David Nicholas, thank you very much for that. Appreciate it. Now.